Alrighty, let's go ahead and get started right at the top of the hour. Good day and good evening, everyone out there. Thank you for joining us. Welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'm going to be facilitating this session tonight with Mr. Rob Roy. Very excited to be back here with you all. First and foremost, we have to cover off just a normal housekeeping detail here, and that's our disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We have this available on our website, so please feel free to read it in detail at your leisure, or feel free to take a screenshot of it now, but that's the main point to take away from it. Most of us out there are likely familiar with the Q&A process once Rob gets to that part of the session. However, if you're new or joining us for the first time, welcome. It's great to have you with us. We're always having new subscribers join in, and we are excited to have you as part of our growth journey in this world of trading options. So without further ado, that covers off the housekeeping details. Apple seemed to help the market avoid a down day today on the heels of their plan to scrap that electric car. All years, all eyes appear rather to be on the PCE report due this Thursday, I believe. And Rob talks consistently about PCE being the Fed's go-to inflation indicator. So maybe we'll hear some more from him about that this evening. And I'll stop rambling on now and get right to the good stuff, who we're all here for, and introduce Mr. Rob Roy.
Thanks, Zach. How's everybody doing? Welcome to this week's Trade Finder Live. As you can see, I'm back in the Dragon capsule, enjoying the warmth of the FLA sun. Happy to be back here. Be a quick trip, but enjoy being here. If we take a look at the chart of the market, just to jump right into things, you can see that we did eke out a gain on the SPY, as Zach mentioned, thanks to Apple.
Yeah, we can't see your screen yet, Rob.
Oh, that would help. Huh.
It is
Yeah.
important.
Yeah, you get into the Dragon capsule with 18 screens and all of a sudden it's a little more difficult.
Bit more to keep up with.
Yeah, just
All right, we're crystal clear.
okay, thanks. So there we can see that we finished slightly to the upside today. As I was saying, Zach already brought it up, but Apple decided, uh, probably a smart move, to scrap their thoughts for I don't know what they would have done with an EV. Would have been interesting to see if they could have integrated in some of the other Apple products into a car, but they've decided not to do that. And obviously the market liked that, and that helped the S&P eke out a gain. We did get somewhat down towards this 10-day moving average following this gap up that we had on the 22nd. You know, I don't like gaps. We are going a little bit sideways, and I'm not sure if that was slip of the tongue or not, Zach. I think eyes and ears are going to be on Thursday's PC report on inflation, hearing what everyone has to say about it. I think we can probably expect a little bit more of the same tomorrow in the markets. In other words, nothing too major one way or the other as we await that. It is the Fed's favorite inflation indicator. And if that comes in hot, like the previous CPI and PPI report did, then perhaps we're going to come back down and at least test 500, if not come down and fill this gap. If it comes in a little tamer, then off we go. We'll see if we can go up and hit that 525 area that the algorithm likes. And by the way, just as a quick reminder, I do this all the time, but I still get comments on our YouTube video when we do the market update. If you haven't visited the Elliott Wave Options channel on YouTube. You can see a market update each and every weekend there, and talk about this. There'll be comments of, I don't necessarily agree with your labeling, and they're not my labels. This software is from the Hub organization, hubb.com. It is programmed directly to the algorithm as Ralph Nelson Elliott himself wrote it. So they're not my labels. So all I'm doing is my best to interpret the charts as the algorithm labels them for you. So just a quick reminder there. This is directly from Mr. Elliott, basically, on how he sees things. There's a lot of software out there with Elliott Wave. Some are personal adaptations of the algorithm, but this is pure Elliott Wave as Ralph Nelson sat down and created it. 100 years ago. So something that's been around that long, I think you need to pay attention to. But we'll have to see how the market reacts to this. My point was that when you see this 4 and 5, it doesn't mean the wave 4 is underway. It means if the wave 4 were to start, that's where you could expect to find support, and then a bounce to the wave 5. But the important point to take away when you're in a wave 3, and I'm a big fan of trading the wave 3, we do that all the time at ewotrader.com, is the algorithm likes this price somewhere up above 525. Now, we could correct first and then go there, a la wave 4, and then move up in a 5, or the wave 3 could continue to move higher and hit that level. And as the wave 3 moves, so do these target projections move. And so they just adapt to what's going on with the wave 3. So hopefully that helps to explain the charts. I mean, each and every week somebody says something about that. So I want to take a moment to go through and explain it again. Some of you have heard it numerous times. But we are well above the 10-day moving average still. We're above 500 as long as the market stays above 500, even if it breaks it slightly to fill this gap. I think the market is constructive. When we look at rates, we're taking a look at the TNX. You can see we had a little bit of a tick back up today, but all in all, for the past 2 weeks, rates have been flat, at least as evident by the 10-year. Not much has happened. We still are in a decently formed 5-wave to the downside pattern. Time is ticking away, though, and you have to wonder what would prompt rates to go down that fast. The only thing I can see is if we see a super tame PCE and we start to get really poor economic data. But even that, I don't think pushes rates down that far. So I think we'll see at some point a relabeling of this 5-wave pattern here on the TNX. But for now, hanging in this area. It was a little bit of a support resistance area going back to the end of the summer, August and September. You can see how we kind of bounced around this level for a while, and we're doing it again. But watch out if that PCE deflator comes in a bit hot. You could see these rates bounce to the upside. So I don't think this sideways stuff is going to last much longer, I guess is what I'm trying to say. A tame PCE probably moves us lower. A hot PCE likely moves us higher. So this 2-week range, I think, is soon to come to an end. Now, some interesting stuff on the dollar. Now, the dollar has stayed pretty strong, has stayed up in this range, similar to the rates. Nothing much has happened in the past couple of weeks. I've talked about this 104 level here the past couple of weeks that we seem to just trade right through. Talking about the dollar staying stronger, I don't really fully understand why with the amount of debt that we issue each and every week. But you just have to surmise that the rest of the world still views this as the best economy, and they want to put their money in the dollar. An interesting tidbit that I read today was that based on the strength of the dollar, as you know, when you have the exchange rates against a currency, with the dollar staying strong, a lot of global investment has come into the U.S. markets based on that because their currencies are lower than the dollar. So it gives them basically a little extra liquidity or feeling like they have a little more money. And nearly 20% based on what I read. Now, I don't have any documentation to say that that is correct or not. Nearly 20% of the investment coming into the U.S. is global from other countries, foreign money coming in because they're taking advantage of the exchange rate. And that could be part of what's driving our markets higher when we all feel like the economy is slowing a bit. I mean, we can all feel that. But I thought that was pretty interesting, so I thought I would share that with you. So there's a benefit of having the dollar stronger. We don't want it to get too strong because then it starts to hurt. If it's only 20% of the investment coming in globally, that still means that it's 80% domestic. And if we start to have the dollar get too strong, it starts to affect the earnings against that same exchange rate comparison. And you'll see that in the earnings. So far, the earnings have been okay. After hours, eBay reported pretty decent numbers. Nothing real exciting, but pretty decent numbers. And so the earnings haven't been as poor as what a lot of people thought they might be. And there's still, some talk of no recession, soft landing, all that. I'm not there yet. I still think we're going to have a mild recession. I've never thought it was going to be anything real significant, but I thought we'd have one, and I still do. I still feel like we're going to. Now, if you're a champion of the Fed and you think they're going to come to the aid really quickly, then you would disagree with that point. And they could stave it off if they started cutting rates sooner than when I expect them to start cutting rates. But if I'm right and the Fed will be late to the party on cutting rates, then I think the likelihood of some sort of recession is likely. And that 20% of global investment, I don't think is going to be enough to support the market. So at that point in time, perhaps we get a little bit of a pullback. I'm not calling for any sort of a major correction in the markets, nothing along those lines, but perhaps a little bit of a pullback is in order. When we look at the VIX, you can see that we are ticking back down after a little bit of a move higher, and we're getting kind of towards that lower trend line. I talked about this in the U.S. market update as well, that if you just draw a line right through there, you can see that the midpoint of the VIX since the lows in December has kind of gotten a little bit higher. So we have a little bit of higher highs and higher lows working here. Is that going to stay the same? If so, then we're kind of nearing the bottom here. And perhaps we see a little volatility. Could the PCE deflator be what brings a little more volatility to the market? Or does this trend end and it was short-lived and we start to move back down towards this 12 or 13 area, which is what's likely if that PCE deflator number comes in a bit tamer than expected. So we're in an area where I think we'll see something from the VIX as it reflects the markets. I'm not a big fan. There was actually a question posted. Wasn't able to answer as many posts on the U.S. market update this weekend. Apologize for that. Had a unfortunately a funeral to go to, so the weekend was kind of taken up with some unfortunate stuff. That's life. And that's why we always talk about how precious our time is. That's why I sign off that way each and every week. You got to value every day, in my opinion. But back to the market, looking at this line here, if we start to break much lower, then we'll break this session of higher lows here. And that could be fuel for the market to continue its upward move before any sort of a correction. But I think we'll get some volatility on Thursday, probably not tomorrow, but on Thursday for sure. Looking at the rest of our markets, we look at the DIA. You can see that a little bit of a tick down today on the Dow, but it's moving very constructively, in my opinion. We had a big move up here at the end of October, and then we moved into a nice rally there through November and December, consolidated that move, and we've stayed kind of in the 45-degree angle range. And that's very constructive when you have the 45-degree angle. The reason I like that so much is you still have corrections. That's the basis of Elliott Wave. The market moves in impulses and corrections. We don't go up every single day. But when you move in a 45-degree angle, the corrections seem to be or tend to be a bit less severe. So you still have the corrective moves, just not as volatile. And if you look at the 10-day moving average, even with a down day on the DIA, we managed to stay above the 10-day moving average, which I think is really key. Now going to the Qs, keep waiting to see, are we going to relabel this 5 to a 3? As you noticed on the Dow, we're in a wave 3. On the S&P, in a wave 3. The market that's not cooperating is the Qs. It's showing a wave 5. Normally, this discombobulation, as I call it, can go on for a bit of time, but at some point you start to get where they come in line. There was a question asked, well, you're talking about, is this 5 going to relabel to a 3? Is it possible for the S&P to relabel to a 5? Well, it is. The Dow would have to do it too. But yeah, I mean, if we start down and the algorithm identifies that this is not a wave 4, that it's more indicative of the end of a move, it's not unprecedented for a 3 to turn into a 5. It just doesn't happen nearly as often as the relabeling that you get when a 5 turns to a 3. Now, if we do get a fairly tame PCE watch out on the Qs because rates are going to come down significantly, in my opinion. And that means that the tech stocks probably catch another bid, and that could be enough to move it to where this 5 turns into a 3. But right now, we had basically a 38.2% wave 4 correction. You look for a 61.8% extension. If you get that, and we're going to move higher, then the next level is 100%. That's where we are on the Qs. So we would have to have a really extended wave 5, which I don't think will happen. Either the whole market's going to roll over and correct a little bit, or this 5 is going to relabel to a 3. And I really do think that the PCE on Thursday is that important. So pay attention to what occurs in the markets on Thursday, I think is the message there. Looking at the Russell, if your viewpoint is the Russell, the small caps are a view of risk on, risk off. I don't know that you really need the Russell to say that right now because clearly money is moving into the markets, whether it's domestic or global. You can see that we had kind of a bit of a triangle formation. We broke out, we tested it, and a nice move to the upside today. It does appear that the Russell, which does stay range bound quite often, is in this area between 190 and 210. We held 190 back in January. As you know, we went up, looked like we were going to go up and hit that 210 level here in December. We didn't. We came back, we tested 190 again, bounced up, hit 200, tested 190 again. Now this time we've taken out 200 pretty decisively, and you have to wonder, is the Russell on its way up to 210? It appears that way. Now it's got to get above this wave 3 high that occurred here back on the 27th of December. But it certainly looks like that's where the Russell wants to go. If we look at the moving averages, this is the one that's a little bit away from the 10-day moving average with that gap up today. Others are a bit closer to the 10-day moving average than the Russell. There is always rotation in the markets. Money rotates around. And that certainly seems to be some money going into small caps. So there's believers that perhaps this whole soft landing scenario, maybe I'm wrong. I'm wrong a lot. So I could be wrong on the whole recession thing. I just can't think that I'm wrong on the Fed, but maybe I am. And the Fed looks ahead and they start cutting rates sooner than I expect them to, and all's good. And the market takes off. I'm not trying to be a downer here tonight at all. I mean, the market looks very constructive. I just think that with the run we've had, be cautious. Pick your spots, trade what the market's giving you, but it's not like an all into the upside type of a market. The old back up the truck, as we used to say at the end of the 90s. This is not that kind of a market, but there's certainly opportunities to be had in the market. Just find them, trade those, but be cautious and keep your stops tight, etc. Something that is breaking big to the upside is Bitcoin. There we go. We had that consolidation. We stayed around 52,000 for a while, and boom, off to the upside we go. And if we back up a little bit here, you can see there was a wave 5, and we hit that 61.8% fib level right at 52,000. We went sideways for a while. And then bam, that's what can happen. There's a 5 relabeling to a 3. So it looks like Bitcoin is off to the races. The halving coming up April 18th. Big move higher. If we look at the 10-day moving average, maybe a tiny bit overbought at this point. Maybe we need a little bit of a pullback here on Bitcoin, but it has certainly caught a significant bid and getting ready to move higher. We talk about the cryptos quite a bit on our live show that we do on Fridays over on the Hub Financial channel. So if you haven't visited it, go to YouTube, go to the Hub Financial channel, subscribe there, and you can be part of our live show that we do with live Q&A every Fridays at 2 p.m. And if you like the whole crypto world, we talk quite a bit about it on those Friday shows. And the talk here from what we've been talking about is Bitcoin goes into the 60s before the halving, and people that know more about the crypto world than I do are calling for 80,000 Bitcoin by the end of the year. So if that kind of stuff interests you, it's a great place to join us. So you can see here that right here around 52,000 was the consolidation and then the big blast off move. Although just calling your attention to the separation from the 10-day moving average. So perhaps maybe a little consolidation through here is needed, but things go vertical. It happens all the time. We've seen it with a lot of stocks, but they don't go vertical forever. We had a fairly vertical move here coming off 44,000. It consolidated it nicely, allowed the 10-day moving average to catch up, and then took off. Maybe we do that again. Maybe this is going to be one of those stair step moves that we talk about where you have a bit of a vertical move, then you consolidate, and you have another vertical move, and then you consolidate again. You can see where this pattern got its name because it does look like a stair step. So if we do consolidate in this area, maybe we're just stepping on up on Bitcoin, but I wanted to show you that. And then Coinbase, holy cow. Look at that move. We talked about this and we talk about that on Fridays as well, but you guys ask about Coinbase all the time. And last week we were talking as long as we hold 160, we could move higher. And I don't think Coinbase is done. The problem is those 2 days have been awfully darn vertical. Look at where the 10-day moving average is. So here's the 10-day moving average, and there's where we are. And on the high today, just got, all right, now we're up in the stratosphere. So we do need to settle down a little bit, and perhaps a little bit more consolidation, I think, would be okay in Coinbase. But I don't think we're done going to the upside there, even though we are within the wave 5 tap box. In my opinion, for whatever that's worth, as long as Coinbase now, which held 160, as I said, which was needed, as long as we stay above this wave 3 high from the end of December in just above the 180 level, as long as we stay above that, I think you can be constructive on Coinbase. I think it goes higher. I'm not sure it goes higher in the next day or two, and I'd love to see a little bit of a pullback here. But I think the rise in Bitcoin and the other cryptos is just going to drag Coinbase right along with it. It seemed to be a little premature here on the concern that with all the Bitcoin ETFs that might hurt Coinbase. But one thing I learned on the Friday show is that those ETFs trade on Coinbase. I didn't know that. I thought they traded on the individual firms that created them. I thought it was on their platforms. So I wasn't aware that that occurred. So you learn something all the time. As I said, I am not king crypto expert, nor do I pretend to be. But when you don't know something, what's smart to do, I think, is to talk to people that do know. And so that's what I'm doing. I'm talking to people that know this market better than I do. Zach is big into it, as you all know, and Ethereum is moving up as well. We won't show that chart, but I know he's sitting there with a smile on his face, and I don't think that smile is going to go away anytime soon. If the people, again, that know more about this stuff than I do are right, then we're just getting going. Let's look at some of the international markets on the EWA. The Aussie market can't seem to really get things going here. Maybe they're waiting on our PCE report. We do have a little bit of an ascending triangle here, so maybe it's just going to be a breakout move. That's kind of a sharp set of higher lows, the lower trend line, but struggling here in the 24 range on the EWA. But if we break to the upside, then perhaps we break significantly, and that takes out that wave 3. Remember, though, that triangles, regardless of what you read out there, I've done an awful lot of work over the years on triangles, ascending, symmetrical, descending, all of them can break either direction. It's not accurate to say that an ascending triangle is going to break to the upside. It might, but it's not going to break to the upside because it's an ascending triangle. It can break to the downside just as easily. That's what the data shows. So we'll see what ends up happening here, but it is struggling with 24, and it could roll over or it could blast off through that level and take off. So maybe it takes its cue from whatever we do in our markets on Thursday. For our friends up in Canada, same scenario here, having trouble with 37 on the EWC. Same type of scenario, almost an identical pattern with a sharp ascending triangle pattern, meaning that the higher lows are fairly vertical here, but it's struggling to get above 37, and you can see it actually ticked down today. So perhaps that breaks. Well, it will break out of this triangle, but perhaps it breaks to the upside and we go up towards that wave 5 target. But again, it could just as easily break to the downside. Isn't it interesting how similar that chart is to the one we just looked at on the EWA? Now looking at Germany, I don't know what's going on there, but they are off and running. Now here's a market that had a bit of a triangle pattern here. This one did break to the upside out of this ascending triangle. Also a pretty sharp set of higher lows. So maybe all the international markets are going to follow suit. Maybe Australia and Canada break out just the same way Germany did, or maybe not. But that is one heck of a move. We need to look at the 10-day moving average when you see that. Let me take this line off so we can see it a little closer. And you can note that we are a bit above the 10-day moving average now. You all know I don't like the gap. You get the gaps more on the foreign ETFs because it matters what happened overnight in their trading. But this is a bit vertical. So gap aside, the move is pretty vertical. And we are away from the 10-day moving average. So I think the German market needs to cool off a little bit here. As you can see, there's a separation between the two. If you are long the German market, the EWG, what you want is you want to see whatever sort of consolidation, any pullback, whatever, hold 30. As long as the EWG holds above 30, with that kind of a move, you have to be constructive on it. But what you'd rather have is it come back, test that level, do some backing and filling, allow the 10-day moving average to catch up. Because when things get separated from the 10-day moving average like this in a vertical move, the further it goes, the less likely it is to hold. So you want to see some consolidation here in the EWG. A little bit of backing and filling, as I said, would be very constructive. And you can be bullish, I think, as long as it stays above 30. I think that's the key. And then the INDA, that's been the hot market globally, just amazing what this market has done. This is the kind of move that you want, not that vertical stuff that we just saw in the EWG. You'd rather see that. And we're right smack in the wave 5. I mean, how many of these charts has Elliott Wave absolutely nailed? And it's quiet a little bit. It's consolidating over the past week, and that's extremely constructive. Even if it did pull back a little bit, that's okay. No harm, no foul. But you want to see this kind of action if you're bullish on a market longer term. And as many people are out there saying, be careful on the INDA or the Nifty, they're priced for perfection. That's the kind of chart that you want. So perhaps we pull back a little bit, just like we did here in the early part of February, or perhaps not. But that's the move that you want when you're looking for moves that have sustainability and continue higher. So even though it's resting a bit now, I don't see any signs that this is over. Now that could change between now and next week. Everything could change on Thursday. But for now, that looks really, really solid to me on the move. I don't know how you could be anything but positive on that market with that kind of a chart. All right, so let's take a look at some of our case study considerations that we've done over previous trade finders here. If you followed along, you know, our record is pretty darn good. I invite you, if you're newer, to go back and look at previous trade finders and see the case study considerations. We have them on the new platform, which is in beta form, so you can follow along with them there. All you have to do is go to hub.com and you can participate right now for free if you'd like to. So we have 3 that are considered open. It's not going to be that way by the time we're done. We looked at RGEN back on the 6th of February. We were looking for this one to go up potentially to 220, perhaps to the upper end of this tap box line. That hasn't occurred so far. So we've just we moved a little higher, not quite high enough. But then we've come back a bit. And if you look at the 10-day moving average, we're below the 10-day moving average. So for this one, we need to hold this wave 3 high. So we did hold it back here on the 21st of February, but we didn't really bounce much. We just went up to the 10-day moving average and came down. As long as we hold above this wave 3 high, somewhere in the call it the 185 area, we can still be bullish on this one if you're following along with it. But if we break below this level, then it likely means that wave 5 is over and we're heading down to this previous 4. So it's really important to hold this level right here. So we're going to leave this on for now. You can see the 50-day moving average is right here. So perhaps we just come down, test this wave 3 high, test the 50-day moving average. As I said before, we did it though only a week ago. And if we do it again, it's got to hold again. And you wonder how many times you can do that. But as long as we hold this wave 3 high, we're okay. But this one's in danger zone of let's just take it off and move on. Better results from GPC. We were expecting this to go up and close this gap. And that is exactly what happened. Our target was 148. You can see in today's trade, it closed at 150. We did have an alert for our alert subscribers at EWOTrader.com. I'll talk more about that in a minute. We took it off perhaps a little bit soon, but this one did exactly what it was supposed to do. So we're going to call that one a winner. We're going to take that one off the list. So we won't look at that anymore. If you're still in it, perhaps you're getting a little bit greedy. I know it is in a wave 3 to the upside, but it's at a little bit of potential resistance here in the 150 range, and it did fill that gap. So that was our goal. And if a move accomplishes your goal, then you're happy, you take it, and you move on. So we're crossing that one off the list. And we're going to take this one too. I don't know if you saw the move today in AIZ. We were looking for this one to move up a bit higher, and bam, look at that. When you get these big moves to the upside here, and I posted this one as a close on the Hub Financial, hub.com platform today, as when you get a big move to the upside like that, even though we didn't quite hit the lower end of the tap box, but when you have these big days, you get an infusion of IV. And if you're trading long calls, that's very helpful. So even though we didn't quite hit the price target, I did post a close there. So we're going to take that one off as a winner as well. Really nice move in a short period of time there on AIZ. So that one was just a week long and a really nice move higher. So that leaves the only one that we have is RGEN. It's the only one that we have left. All the rest of them have all been closed out over time. And speaking of our alert service at EWOTrader.com, we had a really nice trade this week on MSTR, Microstrategy. You can imagine with that move in Bitcoin, if you're familiar with Microstrategy, they have billions of dollars invested in Bitcoin. And that's what this was. Now, note this was in the speculative portfolio. I don't show that very often. Our primary portfolios are the impulse portfolio, which is infused with AI, volatility, which is triangles for breakouts, and then our time strategy, which is for stocks to stay in a trading range, which is also AI infused. But the reason for this one, when you take a look at the chart, you're going to say, well, it looks awfully similar to what you post in the impulse portfolio. But because of this move that MicroStrategy has had to put on in the April call options, that was the lowest delta you could get. That's as far out of the money as you could go, and it was still $810 for one contract. We try to keep our risk around $500 in the primary portfolios, impulse, volatility, and time strategy. So to post something like that, we put it in the speculative portfolio when it doesn't follow our rules and guidelines for the other portfolios, and then our subscribers can follow it or not as they choose. But if you take a look at the chart, you can see it's in a big, huge zigzag pattern with a target price of around 852. Nice consolidation there, starting to move on, held that 61.8% fib level. The DMI looked really good. Everything is there, and that's why I can understand and saying, well, that looks exactly like what you post in the impulse portfolio. But the difference is the cost. So that needed to be a consideration for folks. But look at that. 3 days later, 85% gain on MSTR. We'll take that every single time, and it went up again today, and we're already out. You can see that we closed it. Could have made even more, but didn't know if that wave 3 was going to act as resistance. You get this huge move up, so there's your big influx of implied volatility. There was some separation from the 10-day moving average. It's even more separated now if you looked at today's chart, but we're never going to get upset about making 85% in 3 days. That's never going to be a problem. If we can make 30 or 35% in 3 days, usually take that gain. So that's nearly 3 times what we usually do. So nice $690 gain. Another consideration was the amount of money at risk in this. Honestly, that's a little bit more than what we normally do. But hey, the results speak for themselves. So really nice trade this week on MicroStrategy. Perhaps we get another entry if Bitcoin does calm down and we get some sort of a correction here. We'll look at this is a great way to play Bitcoin if you don't want to go out and pay $55,000 or $56,000 for a Bitcoin the way it is now. I know you can get in the ETFs for a lot less now and stuff, but this is a good way to play it, and that's what we did. In fact, in the commentary, and this is all the stuff that comes out with our alert service. That's the difference between EWOTrader.com and TradeFinder. TradeFinder, we look for case study considerations, and then you're kind of on your own. But at EWO Trader, with the alert service, we send out alerts for entries, any adjustments, and exits. So you can see here a place on the expected move and a place higher in Bitcoin. So it was a play on Bitcoin as well as the pattern, expecting Bitcoin to move to the upside, which it did. And that's what drove this so much higher. So that
Yeah,
gives
that's a phenomenal trade there, Rob. And sorry, I didn't mean to interrupt, but you just got a lot of great feedback that I wanted to make sure I passed through to you. And Edwin, one of our subscribers, said still holding it and at a 365% profit.
All right, well, rub it in. Rub it in. Go ahead. But no, congratulations on holding it. And if it hadn't have had such a big move, I probably would have still been holding it as well. But I just thought maybe that wave 3 would act as resistance. It didn't. So kudos to you. Congratulations. Nice job on holding it the extra day there. So yeah, that made a significant difference. So when you can get 2 days in a row like that, so let's just go ahead and bring up the chart, and then we'll come back and look for a case study consideration for tonight. But see, there's the second day. So here's the big day we got, and then it gapped up. Now note there's a bit of a doji there, so perhaps we're going to get a little bit of maybe some backing and filling. But yeah, when you get back-to-back days like that, the IV just goes rushing in to the stock. And then you can look at just the volatility in the stock itself. So we caught this when it dipped down a little bit, and then you get this big move higher. And this is statistical or historical volatility, which is the volatility of the stock, but implied volatility comes from statistical or historical volatility. So when the stock moves like that, the options get infused with IV. And so it's a bonus. It's like the cherry on top of a sundae, whatever, which gives you a little bit extra gain. So awesome move. And congratulations for everyone that participated in that one. Nice trade. All right, let's see if we can find something that's done as well as we've done the past few weeks here, other than RGEN. And tonight, we have 6 in the impulse strategy here. And for those that aren't familiar where these say EWO here, this is what's known as the pre-computed scans. So they're instantaneous. You can program whatever you want. If you have indicators that you like better than the ones that I look at or differently, you can program your own searches and get your own results, etc. But if you are an EWO Trader subscriber and you have this software, this is included, and these are my searches. So these are my program searches. So when we click the button here on the impulse strategy, here are the results. Reinsurance group, interested in that. Just on the fact that if anybody's been following along, I lamented about this. I don't know if it was last week or it was the insiders meeting or what. But insurance premiums, insurance companies have tremendously raised their prices. When I got my renewal, I thought there was an error of some kind, but the premium went up over 20% without any sort of incidents at all. And that's just what's gone on. So interested in that one right off the bat. Chris River Labs is one that we've done before. Notice Globe Life. So here you have two in the insurance field. When you see more than one in one sector, that's normally a good thing as well. So let's see what these charts look like and see if they follow the rest of the rules. So we already know that they followed all the confirming indicators that I look at. Now, this one hasn't quite broken above 20. If you're wondering, well, why would it be on the list if it hasn't broken 20 yet? Well, one of the things that I programmed in was I wanted to see them a little bit early. I'd rather have them on a watch list and wait. It has to have the ADX moving up. It has to have the ADX above the negative directional indicator. The positive directional indicator has to be above the negative, but I've got it programmed to where I can catch it right when it breaks above 20. Because if you only put in there breaking above 20, then you get all the ones that are up in 30, 35, and you miss these. If you've ever done any reading on the DMI, most people talk about you want the ADX to be above 25. Well, my history, research, and experience has shown that if you get all the rest of the indicators within the DMI doing what they're supposed to do, and that ADX is moving up and it breaks above 20, a high percentage of the time is going to 25 anyway. So you can catch the move a little bit earlier along those lines. Now, this is in a wave 5. We didn't quite take out that high from the 31st of January today, but we came awfully close. We do want to follow along and make sure that we keep this on the watch list because our subscribers know, viewers, I've talked about this before, the ADX can look great like it's setting up and go up to 20 and roll over. It needs to break 20. I have it a little bit early so I can keep it on a watch list, and that's where that needs to stay. So we're not going to make that one case study consideration for tonight. I'm going to close some of these off. The software has virtual memory just like anything else program based, so I don't want to get it too full. So let's see what Globe Life looks like. Let's see if that chart might be a little bit ahead, staying in the insurance arena here. And it is. Notice the difference. You can see, and I'll take all this other stuff off. See the difference in the ADX. So we have the negative directional indicator going down, the positive going up. Now it's already above 25 as well. And then if we put the Elliott Wave on, we're moving into this wave 5 box. So the question becomes, do we get an extended move here? We consolidated really nicely. This DMI is saying that this move is just getting going. So I do think we go up towards 132 here on this, if not higher. So that's going to be our official case study consideration for tonight. So make a note of that for 27. GL moving up to 132. And again, I just like this space, and you may wonder, why are you so focused on insurance? It's not just the fact that they've all raised premiums, it's a defensive sector as well. So if we do get any sort of negative news on Thursday, and some of the big stocks, you know which ones they are, that have been driving the market, take a pause, the money will rotate. And this is the kind of stuff that it will rotate into. Insurance that has power. Globe Life is more life insurance. It's not a necessity like homeowners or auto insurance. There's no law requiring you to get life insurance, but it's in that sector, and they all tend to move together. We held this area in here around the 124, which was support resistance. We broke above it, consolidated, and it does look like it wants to go higher. So that's our case study consideration for tonight. Right on time, Zach, I will bring it back to you for any questions that folks may have for the time we have remaining.
Yeah, sounds great. Well done. Right on time there. And I just want to take a moment to remind everyone or ask everyone out there if they're enjoying the session to go ahead and smash that like button for Rob. It goes a long way in the algorithm, and we greatly appreciate it. We've gotten lots of positive feedback tonight in the chat, so I just wanted to share that with you, Rob, and also thank our subscriber base as well. So let's get right into it. We've got some questions around AMD, specifically SP is saying it's currently continuing wave 4 or has the move to the wave 5 started.
AMD, we look at that one a lot. It's consolidating, I think, pretty nicely here. It's been in a bit of a channel here between 160 and 180. It had a nice run back here when they started talking about their AI stuff. They're trying to chase down NVIDIA, who's king right now. But that's a pretty good consolidation range. The question is whether or not the wave 4 is done. Well, we do need it to break above 180, so we don't know for sure. It looks like it wants to. It's holding above the 10-day moving average. It has for the last 4 trading days. But we tried to break above 180 back here on the 22nd, and it couldn't do it. You know the rules. You need to have a follow-through or confirmation day. This is why I talk about this stuff so often, is their rules to follow. So the break above 180 was a head fake. And if you got drawn in, then you're down a little bit. So you need the break above 180 with follow through. I would suggest to you that barring, if rates jump on a bad PCE on Thursday, that's going to hit all these tech stocks, and it may not be able to do it. So it may not try again before Thursday. But if the PCE is tame on Thursday, then that could be the breakout that we need. But I think you gotta stay here on AMD and wait for a break above 180 with the follow through day, and then I think we're good. I think we're going at least to 200, if not higher. It's another one of those big round numbers, the old Star Trek tractor beam effect that I talk about all the time. I think that's likely where we go. But let's let it do it first. Especially with what could happen on Thursday if we get a hot PCE. But yeah, AMD, it's staying in the upper end of that range here lately between 160 and 180. It's been more of a 170 to 180 range, but it's the Missouri thing. Show me. Let's see it break above 180 here first. Good one to start with, though.
Absolutely. Thanks, Rob. Let's go over to AQST.
AQST. Not one that I'm familiar with. So let's see what the chart looks like. So, you can get these. Who was it? There was another company in the health sector today that had phase 2 trials. Usually they wait till the phase 3 before they get a big move. I can't remember the name of the stock. Maybe it'll come to me before we finish. I had a massive move higher today, and you can get that kind of stuff in these stocks, but the risk is high, right? Everything's risk reward. There was a nice consolidation here through this level at 2.5. Even a little bit of an expanding triangle. And how many times have I talked about this? More times over the past 2 years than probably in my entire 25 years before that. And we've been talking about expanding triangles. And then there's the breakout. I don't know much about this company, so I don't know anything behind it. I don't know what that was, whether it was earnings or news. Let's see if it was earnings, probably some sort of a news. It hasn't hit the earnings report yet, so some sort of news that came out. I don't know what the potential here is. If it goes higher, I want to see it not give all that back. So you want to see a little bit of follow through. But interesting that it made this move right in front of earnings, or maybe because we know nothing ever leaks out. He says very tongue in cheek. Yeah, perhaps this company has something in the works that people like, and then we continue and move off to the races there. But you want to see some follow through. If nothing else, if it backs up at all, it needs to hold 3. So it's made a clean break through all this consolidation that it's had around the 2.5 to 3 level. But for me, in my opinion, it's a little overbought. But on any pullback, as long as it holds above 3, perhaps this is a great long-term story. As I said, I'm not very familiar with this company, so that's about all I can say.
All righty, very well. So we do have a question here on Tesla, and Peter specifically wants to know if it's going to break 200. Manuel was wondering, based off of the Apple news, there didn't seem to be much of a reaction from Tesla, and wanted your thoughts around that.
I think part of that is I'm not sure everybody really took Apple serious on developing a car. Maybe there was a little bit of concern because it did have a nice update today on it spending a whole bunch of money on R&D, and so that's out of the way. Now we had talked about Tesla coming up here to fill this gap. That's the problem now. See, it filled the gap and then reversed. Um, it did hold 180, which was really important. It needed to hold this 180 level. If not, I think 160 was next. Yeah. If it didn't hold 180, we were very likely going to see that 160 level. So it held it. Now the proof is in the pudding. We're back above the 10-day moving average. You don't like to see a stock close on the low of the day. Um, but it's labeled wave 4 with only a 29% move here. So it could certainly go higher and stay even in a downward 5-wave pattern. But 200 is going to be key here. It closed right on it today. Can it stay there? Can it hold this level? If it can, then it has a chance to maybe mount a move higher. You can see where 200, how important it was back in October. So now that's resistance. We're there. Can we consolidate here, or it doesn't have to consolidate, it can move higher, but can we put some distance between where we're trading in 200? If we can, it'll catch a bid again. I feel pretty confident in that, but it's got to do it first. And the way that it acted today is not ideal for what you want, but holding above 200 is key. You can see how it was resistance for over a week here, kept bumping its head against it. Now we got above it, but that's not the breakout day you want. So a close higher tomorrow doesn't count as follow through. You need to have a higher close and then another higher close. That's follow through or confirmation. So can it hold 200, or does it give it right back? That's going to be the thing I'd watch on Tesla tomorrow. But I will say again, if it can get above 200, put a little distance there, I think it will catch another bid. The issue that Tesla has, though, is there's so much competition out there right now, and it's forcing them to cut their prices. You already seen them do it for China because China is being very aggressive in the EV space. So there's a few headwinds that Tesla has to navigate here, but if anyone can do it, Elon can. Ramping up production. He talks about production all the time. If you've ever watched him on a podcast, seems to be the bane of his existence. Production issues, but 200 is key. Can we get above it? Can we stay above it? And if so, then you might catch a nice trade here. But we could just as easily break back below 200 again tomorrow, and then that whole scenario starts over again of, are we going to go back down and test 180? So it's got to stay above 200. And if it can do it for a bit of time, then maybe we'll be talking about Tesla more often again.
Thanks, Rob. Very well thought out analysis there and insight. Do you mind bringing the DMI up real quick? Robert had a question asking if it breaks out and comes down a little to reset, will the ADX then separate?
Very likely. You can see, I'm glad I asked about this. That ADX is not what you want here on this move higher, because it's showing no strength at all. Now the positive directional indicator did break the negative one, so there's some buying and a touch more buying pressure than selling pressure, but no strength of legitimacy based on the ADX so far. If we can continue this move, if the positive directional indicator moves up and the negative moves down, the stock gets above 200, perhaps at some point the ADX can turn. The ADX is a lagging indicator. It takes a little time, but the fact that it made no effort to even try to turn on this move from 180 to 200 is concerning. So yeah, that's a good point to ask about the DMI here. You would want to see
Absolutely.
that ADX turn if it breaks above 200 and tries to move. You'd want to see, but I think they go hand in hand. You know, if people see it breaking above 200 with follow through, it's liable to attract more capital into it and help it move, and then perhaps the ADX can turn higher. But it's not even not confirmation; it's divergence with the ADX and that move from 180 to 200 right now.
Alrighty, thanks, Rob. We have a question here from ZW. Are there any other charting software that plots Elliott Wave? Hub software costs over $2,000, a bit much for a beginner. So I just wanted to preface this by saying that we actually, as Rob mentioned earlier, are in the beta rollout of our new Hub platform that is web-based and is completely free at this current stage. So I'm going to send the account services or account manager's email rather in the chat here. And please feel encouraged to reach out. Stephen will be able to offer more insight and assistance around that. And that goes for anyone that might be wondering the same thing out there.
Yeah, it's a good point, Zach. And the new software, this is the legacy software. I've used it for years and years, but the new stuff is going to be live. You're going to have live Elliott Wave, which is really cool. There's a great social community. There's so many cool things, and as Zach said, you can kick the tires for free. So take advantage of that and get used to it. I think you're going to find you're going to really like it. I'll be using that once it's out of beta and available to everyone. You'll see it here. Won't be using this anymore. It's that cool. So anyway, good point, Zach. All right, a few more minutes, so let's go.
Absolutely. Yeah, let's get right to it. We got a couple symbols from ZW. First one is going to be XLE.
Yeah, the energy sector, oil just can't figure out what it wants to do. As soon as it looks like it's catching a bid, it stops. So I'll bring up the chart of the USO. As you know, if you've been watching, 75 is the key there, but XLE is trying here. If it can get above this wave 4, we might finally be off and running here. We had a long consolidation. We made a nice move. Now we're consolidating again. But it's not surprising because you can see this level at 86 was support resistance for so long. If we can move a little bit higher, then we'll be off and running. And here's the chart of USO. I've talked about, we've been talking about all this stuff on electric cars. I'm still an old, I like the big V8s and the rumble and all that stuff, old-timey motorhead. And I don't really enjoy going to the gas pump when oil is moving higher, but you can always trade it and offset it that way, right? People have said that in the past. Well, just go long oil and then you can hedge your own driving experience. But we do have a pretty nice little zigzag here on oil. And if it can continue higher, it does look like it may want to try to break that 100% level, but the 75 level where the 100% extension is, but it's got to do it if oil is going to continue higher. And I think as oil goes, so will the XLE. They're both consolidating here. You can see there was a bid here. And if USO can get above 75, then I think you see the breakout in XLE too. So
Right, just go over to XOM.
ExxonMobil. So staying in the oil space here. And same type of scenario here. There was some news today, but I didn't hear it because, as you know, I keep CNBC on mute unless somebody that I want to listen to comes on. So there was talk about it. But from just the chart here, here's another ascending triangle, pretty well formed one, not quite the vertical ones that we were looking at on the EWA and EWC, slightly more 45-degree angle here on the higher lows. So ExxonMobil is going to break out. It's going to break out pretty soon. Again, doesn't mean it's going to break to the upside, but if oil breaks above 75, I think it's highly likely that ExxonMobil's breakout is to the upside. And if it does, this move down here really doesn't provide much resistance in the way. So I think you could have If it does break to the upside, you could have a nice run in ExxonMobil. But it just depends on which way it breaks out of that triangle. But that's a nicely formed triangle. So something's going to happen on ExxonMobil here pretty soon.
And while we're on XOM, let's just go over to XLV.
So the healthcare sector, which is, you can see, has caught a bid, as we were talking about with the therapeutic stock. This is what happens. Money's already rotating here. It did it in the Dow going into the end of the year. You saw the big run on the DIA. So this is what's going on now. There is money rotating around. And if we do get a recession where the economy calms down significantly and the market pulls back a little bit, this is where the money's going to go because it's a defensive sector. So it's in a beautiful wave 3 right now. Let's see what the DMI looks like there. So this happens sometimes. I don't get to show this very often because the ADX doesn't do this a lot. But sometimes we talk about the ADX breaking back below 40 can be the end of a trend. But when it goes sideways like this in the upper end of the range, it's telling you that this entire move is strong. So that whole move has been strong. So it didn't just necessarily peak out here when it hit those highs back in January. As it continued and made new highs, those moves are strong as well. So that's what happens when the ADX kind of goes in this sideways range. As I said, we don't see that often. So it's a good one to show. So I think the healthcare sector, I don't think is done. The algorithm likes 155, and I think we probably see the XLV up there at some point in time. So that's clear rotation right there. Let's look at volume when you see that kind of stuff. This is kind of what you want to see is just good consistent volume. See all those touches of the 200-day moving average. So it's not wild volume coming in. That's more of acquisition, rotation type stuff where some of the institutions are moving some money there. So I don't think we're done going up on the XLV.
Alrighty, I promise no more X's for you. I see we're 2 minutes after time, so maybe we'll wrap up with one more question.
Sure, sounds good. And
All right.
as always, great symbols that our community comes up with here. I love these trade finders. You all pick stuff that I don't look at that often, so it's fun for me.
Yeah, and I echo that. And David wanted to pass through that T-Rex was the trade you were thinking of.
Oh, okay.
So thanks for that reminder there, David. And we will end with ARM, ARM for Thomas. Any clues to next move it will make?
Well, let's see what the charts say. After this vertical move, it came down, and I think the last time we talked about this, I think I said it needs to hold 120. I think we talked about this last week. It's come up a lot lately. Obviously, when stocks do this kind of stuff, they catch people's attention. And so this big up move, there was the vertical move back down, but we wanted to see could it hold 120. It tested, it closed the gap with the 10-day moving average. It consolidated at 120. The algorithm likes it going much higher, all the way up to 180 plus. It's a tiny bit overbought again, hence the close on the low today. So as far as the question on where do I see it going from here, I don't know over the next couple of days. It could pull back. It could come back to the 10-day moving average like it did back here in mid-February. But the same story. As long as it stays above 120, I think you have to be long this stock. And I think it looks to go much higher as long as it can hold above 120. So that is a good one to finish on. So as I mentioned, time's so valuable. We really appreciate you spending time with us. If you hit that like button or whatever, we appreciate that as well. Love doing these sessions. Love all the questions, the stocks that you all come up with. It's a lot of fun. Keeps us energized. So thanks everybody for viewing. As I've said, ad infinitum tonight. See what happens with the PCE on Thursday. That's going to tell us a lot about what we're talking about next week.